All right, everyone. Thanks for tuning in. Take a look at the markets. So I was working on our newsletter, and make sure you check back because we're going to have a weekly newsletter, which is going to be educational and profitable. But anyway, while I was going through it, I was just looking at this bombing that happened on Wall Street back in, I think it was 1918. Like 130 people died. Sorry about that. But anyway, I was in Wall Street or New York City in 9/11, and it's like this whole thing was like never forget, never forget, never forget. And back then it's like never forget, never forget, never forget. And guess what? People have forgotten. How many people even know that there was a big terrorist attack on Wall Street in 1918? Look at this one. This is a colorized picture. I mean, so here is Washington. Over here to the left would be where the stock exchange is. Up there is Trinity Church. People are short-sighted, but as traders, we shouldn't be short-sighted because memories change, things change, companies change, people change. But what never changes is human psychology, at least not within our. Uh, Look at that. So that must have been the car that had. So over here is the JP Morgan building. Now, if you go down to Wall Street now, you can go look at this building. This is right across the street from the stock exchange. And you see these like pock marks or blast marks or whatever on the wall. They're still there. They decided to never take them out. So people want to forget, but people have forgotten. All right, enough of that. I'm just ranting. I'm just venting. Sorry very much. Sorry very much is any word. All right, anyway, let's take a look at the markets and see what the hell is going on here. Because we're not surprised markets have been going lower. And the reason why we're not surprised is because interest rates have been going higher. So the first thing I'm going to do here is I'm going to bring up the 10-year treasury yield. So this is a TNX index. It's a Chicago Board of Options Exchange keeps track of it. That's why it's a CBOE. But anyway, look at that. So we got the 10-year treasury yield is up to 4.56 basically. This is the highest it's been in 15 years. Higher interest rates are bad for stocks. Higher interest rates make companies spend more money on operating. They have to borrow money to do their daily operational expenses, to pay people. They're not taking money out of the register, they're borrowing it from banks. If interest rates go higher, well, it takes money right out of the bottom line. It makes these companies less profitable. So I have a hard time thinking that the markets are going to stage any kind of a significant rebound while these yields are going up. There could be a little kind of a rebound. You'd have to be very nimble and astute to trade it because it's very difficult to trade against the trend, meaning the overall trend is down. It's kind of hard to take a position that's long, but that's up for you to decide. At the market jobber here, we just like to teach people how to teach themselves. Okay, so let me go into our markets here. Let's take a look at the S&P 500. All right, now when I look at this, the first thing I see is that, wow, we closed on the lows of the day. This red candlestick is shows prices. So if the candlestick is red, it means the close is lower than the open. If it's blue, the close is higher than the open. This was a pretty nasty day. And we've been talking about this. Not surprising. I know a lot of our community here has made money on puts and on inverse ETFs, and that's great. I still think we got some more downside. I probably wouldn't be thinking about covering any of my shorts until maybe down there, right? Resistance here. It's not very well defined though. But I would say if SPY gets down to around 420, then maybe we think about let's close our short positions. Let's be neutral. Let's see if we get a rebound. If we do, let's play it on the long side, but let's be very careful because trading counter trend is very difficult. But if it starts to break down and go even lower, then We can look at our inverse ETFs. We can look at puts. Okay, so now, as you know, I've been talking a lot about the financial sector. A lot of times, well, sometimes, a lot of times, I'm having a hard time speaking. Um, Different sectors are kind of in control at different times. The S&P is 11 different sectors, and sometimes different sectors are in the driver's seat. I would say right now it's the financials. And this move in the financials today was very weak. We have support here. It became resistance. Oh, I should draw a little another little arrow in here. And then guess what happened? Resistance became support. So how could resistance become support? What the hell is going on here? How could a level that was such perfect support back then in December become resistance now? And the answer is market psychology. All right. It's like there are investors or traders who bought back then who regret their decision. Price goes lower and they're like, oh, okay, I made a mistake. I'm going to get out of this if I can and break even. So when the price comes back up to their buying price, they sell. And if you have enough of these remorseful buyers placing sell orders, the level that was support turns into resistance. Now, how is it that a resistance level turned into support? Well, it's because you have people who sold who are remorseful when the price goes higher. They tell themselves they're going to buy their shares back. If you have enough of these remorseful sellers placing buy orders, the level that was resistance, it becomes support, like it did here. But now that support is broken. So this is the financial sector. I think this sector is in the driver's seat right now. Make sure you check back. But if you don't, keep an eye on this. Two things I think to watch right now: banking sector. I'm sorry, I should say banking industry. I think a lot of these banks are going to go down again, just like back here. This was the like, okay, we invested in bonds, we made a mistake, we blew up. The next blow up is going to be, okay, we invested in commercial real estate. All right. All right, everyone. Thank you so much. Make sure you check in tomorrow, and I will see you then. Have a nice night.